All righty. How the NASDAQ 100 actually works. Actually, I think that is a great idea. And that is what we're going to be talking about today. How the NASDAQ 100 works. And can you make money? Because everybody talks about like, oh, hey, um, we can just wait for the NASDAQ to buy, right? If a stock goes, it's stock gets included into the Nasdaq, it's obviously going to go up. So as soon as it's no announced, we should buy the stock. And then when it gets added to the index, then all the different indexes and the ETFs and whatever are going to have to buy it, and then it's going to go up even more. Now that is common thinking, and it's maybe common sense, right? Is it actually true or is it not true? And we have some lots of research that might change your mind. So that's on this show. Welcome to the Option Genius Show. We are on the new channel today for the first time. Um, and we are going to be talking about the NASDAQ 100 effect and how everything is working today in the markets. So, Matt, how are you doing today?
I'm good.
Awesome.
Yeah, I'm excited about this one. Some
This
surprising stats, I would say.
Yeah. So looking at the markets, S&P down about 10 points. RUT is up about 1.16%. Oil's down to $70.
I know,
It's,
hard to believe we'd say that.
it's been free falling. The QQQs are down 0.75%. Dow is actually up. Gold is down 3%. VIX is at just about 20. And Bitcoin is down below 60.
Yep.
59,000 today. That keeps falling. Um, we've had a pretty good run with market power continues.
Yes,
Uh,
it has.
we had a pretty big Phoenix Lotto win yesterday. We had a double dip yesterday. We had a market power winner today. Yeah, it's just firing on all
Yeah, a
cylinders
nice one at that. So, my favorite market power trades are the ones that you get out right at the opening bell.
right at the
That's
open.
pretty close, 9:33 to be exact, out of that trade.
Yep. Get in and get out. Like get in at like 5 minutes before the bell, get out 3 minutes after the bell. It's an 8 minute trade.
It's quick work right there.
I like it. I like it. Cool beans. So what's going on? What else is in the markets going on today?
Well, I mean, it's an interesting start of the day. We're up pretty high. I believe we're about 60 points up on the SPX, and here we are in negative territory. So, you know, a wide movement. So the VIX is elevated again. Um, you know, we started the day pretty low or lower, and now it's back up again. So there's some angst in the market.
Things are not just not going up, up.
Nope.
Micron, SanDisk, the two big ones have been pulling back a little bit. Um, my wife is asking me every day, like, "Hey, how'd the account do? How'd the account do?" Because it's just changing so much. The numbers just go up and
Yeah,
down and up and down. That's not normal.
not normal.
Yeah. When you see your whole account balance go up 10% one day and down 10%, that's like, no, that's not supposed to happen that way.
We're on a little bit of a roller coaster.
Big time. Yeah. So she's asking me, she's like, okay, so you bought this stock and it went up so much. Why didn't you get out? I'm like, when do I'm supposed to get out? And I looked it up on my phone. I'm like, okay, what did SanDisk do this year so far? And she's like, okay, when it goes up a certain percentage, like you should just get out. And I'm like, okay, what percent should I get out at? She goes, I don't know, like 20, 25%. I'm like, okay, so if I had a stock and went up and I made 20%, you want me to get out? She goes, yeah, that kind of makes sense, right? Because then you wait for it to go back down and then you could buy it again. And then it goes up higher and then it goes down and you buy it and you sell it and it goes up again and you play that roller coaster, right? That's what the stocks do. And I'm like, yeah, but this is not normal. So then I show her the phone and I'm like, 20, you said 20%. Okay. And she goes, yeah. And then I showed her SanDisk and it's like, SanDisk this year to date is up over 700%. So I'm like, when am I supposed to get back in again? The
Yeah,
thing is,
you're not guaranteed to get back in.
it just keeps going up and up and up. And then she's like, because she gave me this whole thing. She's like, if you get out at 15% and it goes up another 5%, you're going to kick yourself. You're going to be like, oh, I missed 5%, but then it'll come down and you can get back in again. I'm like, yeah, no, 700% in 6 months. That's what we're talking about here, man. That's a totally different story. This is not like a Walmart.
No, it is definitely not. Definitely not. Two different
So
things.
yeah, but we're in that phase yet, and coming forwards, I'm thinking about this morning, like what catalyst do we have, right? What can move the market higher from here? We need something. We're probably not going to get lower rates. We already got the war over, hopefully. I mean, they haven't signed officially anything yet, but I mean, for all intents and purposes, the market's like, okay, that's done.
Kind of over. I mean, just by looking at oil, right? It's pretty much over.
Yeah, the straight, people, the cargo's moving. People are like, oh, it's gonna take forever to get the oil down. It's freaking at $70, man. That was it was like in the
Right back where
60s.
we were. Yeah.
Yeah, it was
Yeah.
60s, 65, 67 before the war. Now it's at 70. So okay. Um, I
I think
mean,
the focus goes more on interest rates now.
the
What's going to happen going forward.
but again, the,
What
the
we trying to do,
rates
right?
the
It's most
rates are
likely
not
to do.
going down. They don't really have a chance. I bet that they do go down. I think, but we'll see what happens. I believe that they have a plan. Warsh
I'm
and
sure they do.
his
I,
Trump, and they have a plan. They came out with 5 task forces. That's what they're coming out with. He's building 5 new task forces for getting better data, for communications, and for a couple other things. Now, getting better data, right? That sounds innocuous. It doesn't sound very scary, but the data is what they base their decisions on. So if the guy's like, oh, this guy, this company is saying that unemployment is very, very high, but this company over here, they're reporting that unemployment is very low. So I'm gonna go with them. You
right. They're
know?
going to go to what supports their decisions. I mean,
Yeah, exactly. So I think he's going to manipulate the data in that sense, in that regard, to give more proof and standing to say, yeah, we're gonna cut the rates. I think he's gonna deliver. I don't know when, maybe not the next meeting, but it's in the works.
it makes
So
sense how he came out too, I think. I mean, he came out like, hey, there's a new sheriff in town. We're going to, really work to make changes, right? And I'm the guy to do it. But I think what they do going forward over time, it's going to be more of what Trump wants.
yes. And everybody's like, oh, Trump wants the stock market to be really high. He doesn't care about interest rates. He's happy as long as the stock market is high. I was like, do you know what Trump does for a living? Like he builds buildings, he owns properties, he borrows from the bank. That's like his full-time
He's,
job. Borrowing money is his job. And you think he doesn't want interest rates to go down so that he makes more money? That's like the dumbest thing I've ever heard.
yes.
Stock market is great for, if he was going to run again, which I don't think he is. I think he's tired. I think he's going to not run again. But he wants rates to go down because it will make him millions of dollars, if not billions of dollars. And if not him, then his cronies and his friends and the people that suck up to him. So yes, they all as a group want lower rates. Every rich person out there wants lower rates.
Yeah, you're gonna use a system, and that's borrowing, right? Let's call it what it is.
Mm-hmm.
So, you know,
Yep. So
and the debt of the country. I mean, you can't finance it without lower rates.
that
Can't,
that's why the rates are going up
no,
because people are like, well, if you want me to buy your debt, you're gonna have to pay me more interest.
that's
So
right.
the rates there are going up because of that reason. Um, so it's a tricky, 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 tricky situation. Um, we'll see what happens. But for now, let's head on over to today's topic. So it's called the NASDAQ 100 effect, right? A stock gets anointed by the NASDAQ as one of the top 100 stocks to get the honor of being in its index. And that means that it gets tracked and gets followed. And then all the ETFs like the QQQ have to buy this stock in the index, and it becomes the benchmark. The NASDAQ 100 is the technology benchmark. So it only makes sense that when a stock is chosen, if more people are going to buy it, the stock will go up. And then every time, Joe Schmo home or Judy homemaker or whatever, whoever's out there, they put their money in their 401k or their IRA, and they say, or their mutual fund, and they say, hey, get me the NASDAQ 100. A piece of that money goes into this new stock that just got it. And so it continues to rise. And that's what they say about Apple. Like Apple is one of the biggest ones. And so Apple gets people to buy it every single month because people are putting money away in their retirement accounts and their pension funds and all that. And so Apple just continues to go higher.
Yeah.
It's an interesting concept. So let's take a look and dive deep into what does that mean? How does a stock get into the NASDAQ 100? What are they looking for? And let's look at the research on if it actually does work as a money-making strategy. Now, again, this is trading, this is investing, not individual investment advice. You can lose money trading, you can lose money investing. And so talk to your financial advisor or whoever is in charge of your money, maybe your wife, maybe your spouse. Talk to them before you do anything. Make your, good decisions and do your own research. But we looked at the last 78 stocks from 2000 to 2015. Is that right? Let me hold on. Let me double check those numbers. Sorry, from 2010 to 2025. So most recent 15 years, we looked at 78 stocks that were added to the index to see how they did. Now, in order to get into the index, right, there's three ways or three different timings. So first is in December. This is where they do like a whole clean sweep type of thing. They look at every single stock, they do the evaluation. Is it going to stay? Is it going to go? And if it's going to go, then they kick it out and they find a replacement. Second week of December is when the results are announced. And then the third Monday of December is when everything it changes over. They usually do 3 to 7 companies at one time at that time. So
And I might add, this is the one you usually hear on the news. There's
yeah.
usually a sound bite or something.
Hmm.
So they're like, oh, okay. Oh, there's a rebalancing.
Yeah, this stock went in, this stock came out,
Yeah.
and normally they talk about the stock that's going in. They don't talk about the one that's coming out.
They never
Yeah,
do.
they talk about the one that's going in because then everybody's like, "Oh yeah, I'm going to go buy that because it's going in," right?
Yeah.
And I have done that myself. I was like, "Oh yeah, this stock is joining the S&P for example." I have bought that stock right now. I bought stock. I bought calls on a stock last week on Friday because they were going to do the quarter rebalancing, which just happened,
Yes.
and it went to effect on Monday, 2 days ago.
June
So
22nd.
yeah, so the quarterly rebalancing happens every 3 months. And if anything has fallen below the 100, so if there's a stock in the index and they lose value, then they kick them out of the 100. Um, so in 2026 of June, they added Astera Labs, CoreWeave, Nebius, which is the one I bought, Rocket Labs, which is the one my dad told me I should buy.
Yeah. Rocket Lab. What does Rocket Lab do? I forget.
They make rockets.
Okay. Rocket Lab.
They're kind of like a SpaceX mini competition, or
Yeah.
they put up satellites in space and stuff. Teradyne,
Paradigm.
um, and they took out some like Zscaler and Verisk Analytics. So those were the ones that were just added. Nebius, I thought, oh, it's going to go up. Um, that's the one I bought calls on. And then the third way, which is the newest way, which is the SpaceX Elon Musk asterisk rule,
The fast way.
the fast way
Let's go.
is that if a company's market share is large enough to be in the top 40, then it can join right away, even for an IPO. So CoreWeave is now one of those, and SpaceX will also be added very soon. CoreWeave was actually added in June already. They had to wait. But SpaceX will be added, I think, 15 days after IPO. So it's coming very quickly for that one.
You did watch OpenAI and Anthropic going forward.
Yeah, they might as well be
See
added
that probably be
for
that
that.
rule.
So we'll see what happens there. But now it's a rule, anybody that if it comes out and it's in the top 40, if it's bigger, it's and now SpaceX is obviously like the fifth largest company in the world right now, or maybe more. It may be down because it lost value, but maybe it's the 20th largest company in the world, just somewhere in there. So it's definitely part of the NASDAQ. And then quarterly or emergencies, if there are, if one of the NASDAQ 100 gets acquired, if they have a merger, if they go out of business, they do bankruptcy, they transfer, um, their listing because they have to have a listing on the NASDAQ. But if, like, let's say they move over to the New York Stock Exchange or some other stock exchange, then they get removed immediately. And then somebody else is added without much of a hula bub about it.
Yeah.
So in order to be considered as a stock, you have to be on the NASDAQ exchange exclusively. You cannot be on any other exchange. You cannot be a financial company. So no banks, no insurance, no brokerages. You have to
Sorry.
have
Sorry, Banks.
Sorry, thanks. You have to have at least 5 million in average trading volume, $500 worth of stock, or $5 million worth of stock traded. And they used to say that you have to have 3 full years of being listed until recently, not be in bankruptcy or having an acquisition. So that is the core. Those are basically the rules. They don't have a rule anymore about profitability. S&P 500, they do. You have to be a profitable company to get in, and you have to be
Yeah.
at least 6 months. NASDAQ is changing that. Now, we're specifically today talking about NASDAQ, and all of our research has been done on NASDAQ stocks and how they react to being added to NASDAQ. We'll probably do a follow-up on the S&P 500 and see, okay, hey, how does that work? Is there anything different, miss and match? And maybe there is some kind of edge created there. I don't know. That's what we're always looking for,
But
right?
not, I think it's coming, right? You can see the general theme. Everything's going quicker and rules are being changed. And yeah, it'll probably happen there too.
Maybe. I mean, so far they stuck to their guns, but if there's a lot of competition, then yeah, it might change. So let's see what happens. Now, I think over here it's interesting because SpaceX could have listed on NASDAQ, or they could have listed on New York Stock Exchange, or they could have listed anywhere. And so I think for them, it was more negotiating like, hey, we want to be in the index. So NASDAQ, you own the index and you own the exchange. So if
Mhm.
we're going with you on the exchange, we want to be in the index. And they were like, okay, well, do we stick to our values and our rules, or do
Or is
we
this a one-time
do
exception?
we make billions of dollars? I think we'll go with the billions of dollars.
Yes, I think that's how it went down.
I think it would possibly. Who knows? We're just making up conspiracy theories, all right? But still, that's probably maybe what happened. Um, so now, all right. So you have this stock, right? And how do they choose it? Like what rationale do they have? They don't really tell you everything. But the idea is that we looked at 78 stocks that were added to the NASDAQ 100 over the last 15 years. Now, before they were added. Now, the biggest thing is they want the top 100, right? They want the top 100 stocks that are trading on the NASDAQ exchange to be in this index. So, in order for a stock to become one of the top 100, what does it have to do? It has to go up in price, right? The stock has to go
Yeah.
up. And so the average stock that was added to the index gained 34% in the 6 months before they announced that he was going to join. So you have a situation where there's a stock that's really ramping, 34% in 6 months. That's a lot for most companies. For every company, it's a lot. That's huge. And then they get the nod and they're like, okay, you're big enough. You can come sit at the big boy table now. And they put out the announcement. And then usually they announce it. And then usually like a week later, then it gets added. and everything switches, and then people have to buy it or sell it, and they have to sell the ones that come out, and they have to buy the one that got in. So we're thinking, okay, so it's already ramped up into the announcement. Then you have an announcement, probably should go up because there are people buying it before all the indexes or all the ETFs. And then when you have the inclusion, then it should go up even more because now you have all these big institutional buyers, the ETFs and whatnot that have to buy it, and it should go up even more and just continue to go higher. That is
Yeah.
the thinking. The reality is that from the announcement to the day that it's included, the average stock lost 0.4%.
Which was really um, actually a little bit hard to read, hard to
It's hard.
understand.
It's hard to,
Yeah,
yeah, like
because
what?
you're like, how is that possible, right?
Right. So you have the average stock shooting up 34% in 6 months. And then they say, hey, you're going to be in the NASDAQ. And then it goes whoop, sideways, pretty much sideways until it gets into the NASDAQ. So, like, what happened? Like, it's like, you cut my momentum off. Like, I can't go up anymore. Now,
Like a minor league baseball player getting to the pros, right?
that's average,
And all
right?
of a sudden, "Phew."
Yeah. So it's really weird. Now, why does this happen? Why do you, I mean, well, it's people that know the criteria that what NASDAQ using. Like they have a pretty simple criteria,
Yes.
It's like we want the
Yeah.
top 100. Okay, well, if you have a stock that's like number 101, right? And it's right there, if you buy it, it might get into the 100, right? So they know which stocks are there. They know which stocks are in line, and they see other stocks that are dropping.
Yeah. So they have
So
they
they
can see it
know,
already.
you're like, how many are going to be replaced this quarter? Oh, four. Okay, who are the four? Da-da-da. Buy those. Buy those a month, 2 months, 3 months before they get added. And so you could make your own hedge fund, I guess, or your whole thing about this.
Yeah.
Like figure out the stocks that could be added, buy them all, and then some of them are going to be home runs.
And it's hard to believe that it's right there in public view. Here it is,
But
right?
everybody doesn't know that happens.
Oh, they don't. No, of
They think,
course
oh,
not.
it's going to keep going up, but it doesn't. The math says and the research says they don't go up after the announcement. So now what happens after that? Well, 20 years ago, 20 years ago, getting added to the index was guaranteed to pop. Your stock was guaranteed. But today, with $800 billion in just the one QQQ ETF, I'm not talking about all the others that track the NASDAQ one. There's 800 billion in just the QQQs. The arbitrage is so crowded that everything is just flat. So buy the announcement, like buy the stock when they make the announcement, it doesn't work anymore. And that we've seen that with the math. They're going flat. Okay. The one I bought, Nebius, I bought it for inclusion on Monday. It was up.
Yeah.
It was up a little bit on Monday. And then Tuesday and Wednesday, it's now lost everything. And now I'm sitting at a loss and I'm thinking maybe I should just get out of it after reading this report. So I
Yeah,
was
isn't
like,
it? It's so hard to read this report because I've done these exact things, right? And as much as we know about this stuff, um, wow,
you
right?
keep learning. You keep learning.
Of
And
course,
you
some of
have
it
to do
never
the
goes.
research. You have to do the research and that's what we're doing. That's the
Mhm.
whole point of this show, to
That's
educate
right.
people. So I think we're opening up a lot of eyes. No, let's keep going though. So, um, what surprised us most was that if you have a stock, right? Like let's say it's already gone up 100%. So average was 34% before. But let's say there's a stock that's gone up 100% in 6 months. Well, that's overextended, right? That's like it's gone up too far, too fast, like my wife. It's going to come back down, right? That's normal. Um, the data shows the exact opposite. Stocks with the highest pre-announcement momentum, meaning they were going up the most before they were announced to be in, had the highest returns 1 year after they were added. 1 year after. So the ones that were just skyrocketing continue to skyrocket the most. They, on average, made about 67% on average.
So objects in motion tend to stay in motion.
Hell yeah.
Pretty much
They might
that. Pretty
they
much
might
that,
even
right?
they might even get faster.
Right. Very
So,
interesting. So a year later,
yes. Now, rate hikes can hurt
yes,
this
yes, I've heard
situation.
you do that.
Rate hikes. Okay. So, the worst group in the entire 15-year study was in December 2021. So, the stocks that were added there were six stocks: Lucid, which is the electric car company, Zscaler,
Yeah.
Datadog, Airbnb, Fortinet, and Palo Alto. They were added right before the Fed started raising rates, and none of them beat the NASDAQ 100 that year. Lucid actually fell 81%. So any stock that's making it in right now or getting in right before they start raising rates, hopefully, is, or maybe will not do that good. Um,
So I painfully know this lesson. Airbnb. Oh, total dud. There you go.
so even if you're being added to the NASDAQ or
Yeah,
an index, it doesn't mean it's going to keep going up because it doesn't protect you from the overall
big
larger
decision.
macro changes in the environment and the financial situation.
Nothing's immune from that.
Yeah.
Yeah. Yeah.
So it impacts everybody. All right. So what was the best performing stocks? Well, I mean, anybody can guess. I think semiconductors, AI, it's been going on for 15 years. Um, and the worst ones were, I guess they call them story stocks.
Yeah.
Like
Yeah.
they have a story behind them, like Peloton, it's a bike.
I mean, Peloton, you could just see it. You could just see it, right? For the most part. It's like, okay, this is like all hype. It's a story. Everyone's,
It's a
having
fad.
home. Yeah,
It's a
completely,
fad,
right?
It's
So
like,
you knew that was not going to have staying power,
yep. Um,
most likely.
Lucid, MicroStrategy, the ones that own the Bitcoin, they did not do good either after they joined the NASDAQ because they have one thing. Their whole thing is based on Bitcoin. If Bitcoin goes up, their stock goes up. Bitcoin goes down, their stock doesn't matter
Yeah.
what index they're in. Um, that's the only thing. Um, and so now the question is really, how do you find the ones that are going to go up? How do you find the ones that are going to be included? So just going through some numbers, the average 6 months gain before the announcement was 34%. That's how much the average gained. After they got included, I said the average was negative zero point 0.4. So basically, they're flat. Average stock is flat after they got from the announcement to the inclusion. After the inclusion in 1 week, the average stock is up 0.6%. So 1 week after inclusion, it ain't really doing much. I'm thinking there's going to be this big jump and everybody has to buy it. And
Yeah, at least a pop, right? For at least a week or so, you would
yeah,
think.
but the average in 1 week, it's only up 1%. Then that's like nothing. That could be up. It could be it's a coin flip, one or down. Like nothing. 1 year after inclusion, though, 1 year after inclusion, the average stock was up 20%. So that's decent. 1 year after. But now remember, their average is up 34%, and now the average is up 20%. So they definitely have slowed down. Um, and out of that, only 41% of these stocks that get added do better than the NASDAQ that year. So you got like a 50-50% chance of choosing which one to buy.
Yeah.
Is
Mhm.
it going to beat the NASDAQ or is it not? So to me, it doesn't make sense. This strategy of, oh, hey, I'm going to buy it because it's included in the NASDAQ index, it's going to go up. Looking at the data for the last 15 years tells you the opposite.
Yeah, not anymore.
You have just because it's being included doesn't mean it's going to do well. It might do good, like average was 20%, but that wasn't better than the index itself. Those are
Right.
years when NASDAQ did better than 20%. And so That, and that, again, average, we're talking averages. Half of them were lower than the index and half of them were above 40, 60, 40. So you don't know.
Mhm.
And definitely, I think now that once it's announced, I think you're too late. Like, oh, you missed it, you know? Now, maybe after it's included, you can wait a little bit and see if it continues to rise and then you get back in. But I think the big jump is to figure out, okay, which one of these are going to be included and buy it before the inclusion.
Be interesting how some people will come into this and actually start trying to short some of those ones coming in.
I don't know. I don't know.
You know,
That's
you just think about that little period, right? And
yeah.
that data, and you're like, oh,
Or I mean,
like I
you
said,
gotta
this is strictly entertainment,
yeah, strictly entertainment. We were just coming up with ideas. So like, okay,
but
so
the
you have
data's
the
there.
yeah, and then you have from announcement to inclusion is about a week, right? Maybe a little bit over.
Yeah.
But the average stock is flat. Oh, Iron Condor time.
Iron Condor, right? You could do it.
Iron Condor. That's like the total opposite of what you would be thinking. Like
I mean,
what?
this is really, really telling information. You know,
So
very
that
interesting.
I mean, yeah, any you can come up with a whole bunch of different strategies looking at this.
Yeah. As I look through it, I'm like, wow. I'm like,
Yeah. So so we have some okay, so now the big question now is okay, how do we make money on this? Now we thought we were going to make money by buying it. Obviously, that doesn't pan out.
right.
So that really dashes everybody's hopes. So we got to give them something. We got to be like, okay, you can't do that, but how about this? Right? So what would you say? Like what are we gonna how do you figure it out?
Well, so I mean, I don't know, my mind's going many different directions right now because it opens up all these different things.
Okay.
But it seems to be that you would just go on the recipe that the NASDAQ has made, right? That these hedge funds are following, right? So I would start there.
Yep. And so basically that formula is to figure out which are the top 100 largest companies. Now profitability doesn't matter. Um, it's just looking at the count size, and we talked about the other thing, 5 million traded and this and that, no bankruptcy, blah blah blah. Okay. So we got to do some research and we got to find out, okay, out of all of the companies in NASDAQ, give me a ranking, right? I need a ranking of all the top 100, and then I need a ranking of all the rest of them so that I can figure out which ones are going higher and which one has a chance of beating in, because there's overlap, right? Every month there's overlap. So there's like the
Yeah.
top 100, but then there's like maybe another few down here, but they might go up in price and join and they might go up in ranking, right? So they might go, okay, I'm like number 106, but all of a sudden I have good earnings and I pop up. So now I'm like 96. Oh, I'm going to be in the index, but then I go back down again. So
So
then
you
I
need to
can't be
be
in the
up to
index.
date with when that occurs.
Yeah.
So
hmm
I
So
guess you would make your list and then you'd be checking it
you'd be
pretty
checking
close.
it close, but you want to be in it also. You want to be in it early. You want to be in it like 6 months early because they're
Yeah.
going to ramp up to get in there. So you don't want to be too early. You don't want to be too late because otherwise you've missed the big move. Now, lucky for all of us, I guess, the NASDAQ has already done some of the work for us. So, yes, you can go and get a list of every stock on the NASDAQ. But if you take a look at what's called the NASDAQ Q50, ticker symbol NXTQ, NXTQ. Th-
NXTQ.
yes, this is the 50 largest NASDAQ stocks that are not in the 100. So I guess you got 1 to 100, and then you got 101 to 150. So that's what this is. This is the next 50 candidates that, if they move higher, can take over a spot in the NASDAQ 100.
Hmm. Okay.
So if you want to know what's coming next, that's the first place to start. And then you can go to any one of these financial screeners online. FinViz is one of my favorites, finviz.com. It's free. You can do a search by full market cap, and you can, figure out, okay, who's listed on NASDAQ, what's their market cap, and then we want to look at number 101 through probably 130, maybe, or 150, however, how many you want to look at.
Mhm.
So you're basically you're making your candidate list, right? And then these are the ones you want to watch and you want to see how they're doing. And if you see one starting to pick up and getting some momentum, maybe that's time to jump in there. Um, and so that's basically the game plan, right? You want to watch the calendar after that because they have the annual renumbering happens in December. Um, then they have the quarterlies. So it could be any time there. So at the end of any quarter, they could be changing it up. So that's when you want to know. Um, and then some of the things that will help you is, does the company have a tailwind? Like, what's the story behind the company? Is it part of a big group or is it like a one-off, like a Peloton? Um, are they profitable? Do they have earnings
That
or
was
is
a
it
big one.
just,
I looked at it. Yeah.
EBITDA? Yeah. So the more profitable a company is, the better the chance that it's going to ramp up. Is revenue growing and getting faster? That will help you a lot because not just that, okay, we made this much more, but our revenue growth, last year we made 20% more. This year we're making 40% more. Next year we're going to make 100% more. So the revenue growth is growing itself. Um, are institutions buying this stock, right? Are the hedge funds, are the mutual funds, are the banks, are they buying this? We can figure that out by looking at their 13F filings. So every large hedge fund, mutual fund, bank has to record and tell us what they own. And so if you have a candidate, like, okay, I like this one particular XYZ stock, it looks good, da 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 da. Are people buying it? You can then go and research and say, okay, let me look at the 13Fs and let me see if people have it.
Right. You don't have to read the whole report, right? You can just
No,
find
you'd
out.
have to just look, okay, what did they buy? Who bought this?
Yeah.
Um, and you'll see if over time, if more and more institutions are buying it, you're like, okay, this is picking up steam now. It's time to get in. And then, look at the Q list, the 50, the Q50. Is it already on the list? If it is, it's a good chance. Or you could just go to the Q list itself and just pick one of those or buy all of those, or, buy the whole Q50 as the index. That's something I would look at. Like, does the Q50 do better than the entire Qs? QQQ. Who knows? We'll take a look at it. Um, and then the sweet spot. The sweet spot is how is it done in the last 6 months? So if it's ranking jumping up, then it's more likely going to be keep going and is more likely going to be included. So if it's gone from like 150 to 105 in 6 months, okay,
Yeah. There you go.
yeah, that's probably going to be growing. So based on the data, the best time to get in on one of these stocks is from 3 to 5 months before the reference date for the annual December. So the best time to get in for December is to somewhere buy it around June, July, August. So you buy the stock June, July, August, and then hopefully by December it'll be included. So you have that whole ramp up for 6 months.
And we're in June.
Yep. So what to avoid? What to avoid? Don't
Well, we know
buy.
one of them.
Don't buy after the announcement.
Yeah.
After the announcement comes up, you missed the run and you don't need to get in. You have the opportunity to wait, see how it's doing, and then pick the best ones from there afterwards. That's one. Don't buy the announcement. Number two, if it's up more than 100% in 6 months, don't buy it unless the fundamentals are really strong. Because a lot of times it's going to be a momentum shift
Yep. And then
and then it's going to come back down when the momentum is over. All right. So those are, and then any unprofitable companies, especially when the rates are going up. If they're not making money or if they're not doing very well and the rates are going up, they're going to suffer the fastest and the most. Yeah.
Sometimes the most important thing is to figure out what to avoid, right? And
Hmm.
these are very, very telling.
Yep. And I mean, I wish I had known this earlier.
Yeah,
But like I made a big case for SpaceX. Like, okay, this, the case for SpaceX is that it's going to be included in these indexes. Well, maybe it doesn't make a difference,
yeah,
because SpaceX was at what, over 200, and right now today it's at 157. So it's sold off.
back, yeah.
Even with, oh, it's going to be included in the index. No, it doesn't matter.
They actually dipped below the IPO, right?
Did it? IPO is
Yeah, for
135.
they said briefly. I have to look at it, but it was briefly close to it. So,
Okay. So some questions that you might be thinking about that we came up with is that if the gains happen before the inclusion, why does anybody care about being added? You know, um, and we talked about this. Now, first of all, there's $800 billion of the QQQ that needs to be invested. Um, so all the money that comes in every month passively is now going to be put into the stock little by little. So it's not
it's
a massive jump, but it's sustained.
it's required. Yeah, it
Yeah.
has to.
So every month it'll be, there's a buyer there. So that creates like a floor in demand. Like, you know, if there's always going to be a certain amount of buyers that are going to come in and buy this much of the stock. If there aren't people selling it, then the stock is going to rise. That's it. Um, Second, it's like credibility. If you're in the NASDAQ 100, you obviously you get a lot more press. Um, you get a lot more coverage, more marketing, free, and so you might get more customers, so it might be good for the company. And the executives look good too. So
Mhm. They do, right? Gives them a
um
lot of
so
perspective.
when you do the scan, right? Like when you're at Finwiz and you're like, okay, give me the top 150 companies or 200 companies on the NASDAQ. What's the most important thing to look for? Um, Based on our research, it's profitability. So the single biggest separator between the outperformers, who did really, really good, and the underperformers was whether they were actually generating real gap earnings when they were included. So if a company's profitable, it beat the index. Unprofitable, almost always failed, disappointed, did worse, or did a lot worse. So that's probably the biggest thing to look for, profitability. And for the new fast entry rule for SpaceX, right? Um, a stock can be added within 15 days after an IPO. So it's going to be a little bit different because you don't have that 6-month time frame, right? Of the stock just jumping up. So we're going to have to see how this affects it. This is a brand new thing that just came out because of SpaceX. Um, I think it might be a pop for the stock. Well,
Yeah,
we'll have to see. It's right now. It's all bets are off. We don't know.
yeah,
So,
it's a new rule. So
mm-hmm. Yep. So it's yeah. So super 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 interesting. Definitely going to change the way I invest
yeah,
now.
it's definitely an eye opener. Right.
I thought I'm going to be lazy and I'll just let these people do the work for me. And whenever there's an inclusion, I'll just buy it then and I'll go up. Like, no,
You're
sorry.
never going to look at this the same way
No.
after this. I
Yeah.
don't. I already am. I'm already like, okay, well, no.
I was like, oh man, I got to do work now. I got to do a scan and I got to keep watching them. And
But it's relatively easy to do. I mean, it's just
yeah, it's pretty simple to do. Especially now with AI, it's super simple. Um, you could have the AI and tell it, oh, hey, do a research for me and tell me, who are the top 200 stocks, or give me stocks 101 to 200, and then you can just set up a watch list on your brokerage platform and just look at the charts every once in a while.
yeah.
You know?
I mean, it's that easy.
Yeah. I mean, you can even tell AI, okay, AI, do research into all of them. Tell me which ones are profitable. Tell me which ones are owned by institutions. Tell me the analyst ratings, which ones are buy, sells, holds, and give me all that information. And it will go out there and do everything for you. And it'll give you a complete list. and be like, here you go. This is it. And then based on that, you pick and choose which ones you think are going to go up. And now obviously you would probably want to wait, right? Get confirmation from the price before you jump in. But again, not individual investment advice, but I think this plan is something that I'm going to be implementing. So,
Yes, me as well.
yep, sounds pretty cool. And it's, you get in before the pop. Like the pop is going to happen. Um, I don't know. Like it does seem like an edge, right? It does seem like okay, this could definitely be something worth manipulating or trying to game the system to make money from it.
It does, especially with the data backing it up.
Yeah.
Right. So there's some
And so many people thinking the opposite, right? So many people thinking that, oh no, you just buy it on the thing. Well, no, that's when you sell.
right.
Right? If you've written it up and then they say, oh, hey, XYZ is going to join the NASDAQ, okay, that's when you sell on that announcement. You're like, okay, ride's over, fun's done, take your money, let's go. And that's when you get out. So,
Yeah, this is a big eye opener for sure. Of how the
yep.
process works.
Yeah. So I think, yeah, those of you guys who are watching, listening, if you implement this, let me know. Let us know at help@optiongenius.com. Write to us or find us on social media or whatever, and let us know if you're doing it. It'd be really cool to see how people take this and run with it, because I'm sure there's other ways that we have not thought of yet, to make money from this.
Oh yeah,
Like,
and then we can have follow-up shows about this. Right?
yeah, like you mentioned shorting. Okay, that's
It
interesting,
just came to my mind. I was like,
Yeah.
huh. There's a period of time where you're like, okay,
Yeah. I mean,
back
maybe
up.
maybe we don't want to short it. Maybe we just want to buy puts on it, so it's like more risk
Hmm.
defined or whatever, and so we can still make money from it.
There's a multitude of things that you could do, which
Mhm.
makes it very interesting.
Yeah. Yeah. I mean, you could put an anaconda on it, you could put a reverse strangle on it. I mean, there's like 100 billion things you could do. Uh,
Your
so
mind, you just all of a sudden you're like, huh,
yeah.
what time frame you can do these in, and all sorts of different things.
Yeah. I mean, once you know, okay, this is likely to happen, okay, now we can build something around it. Um,
Absolutely.
So, and they changed like 78 stocks in 15 years. So what is that? 78 divided by 15. Uh, five stocks a year get added. And lately they've had more. We just had like five stocks added this week. So, on average, it's been five stocks going in and out a year, but sometimes like right now, markets are higher, they keep changing. And, it's a self-fulfilling prophecy. If you're doing well as a stock and you're going up, then more people are going to buy you and they'll put you index, which is going to make you go up even more. So, and if you're doing poorly, right? If your stock is doing poorly, and that might be the strategy right there. You want to short the ones that are going to get kicked out of the NASDAQ 100. That's another strategy. We got to do research on that. There you
There you
go.
go, right? So your
That's how you do
mind
it.
never, yeah, there's all
Yeah,
sorts of
so
things
that's
you
how
can.
we do it. So okay, so you have a stock that's not doing well, or maybe it's going sideways. It's just not growing or it's going down, and it's at risk of getting kicked out. Okay, short it because once it get kicked out, all the ETFs and whatever have to sell it.
Yeah, you're reverse engineering this whole thing.
And
So
it's already been going down, so there are like no buyers, right? There are no buyers left because the stock is already falling, and now you got all these people that have to sell right away. That okay, I want to do the research on that.
I know it can really take you. There's
That might
all
be.
sorts of things you can do off of this.
Mm-hmm. So very, very interesting research. It's like, holy cow. So that's yeah. I mean, if you're listening to this, listen to it two or three times
Yeah,
because there's a lot of details, there's a lot of data that we went through, and I'm sure just thinking about it, pondering on it, you might come up with something better, another strategy, another way to play with it. And so this one is a real, yeah, you can point to this and be like, yeah, okay, this is gonna make money.
I think this is Option Genius show, one for the archives.
One for the archives.
Yeah,
Everybody needs to watch this one.
uh, it is. Wow.
So, yep. So this has been the first show on the new channel. Thank you all for watching. Thank you all for joining in. Make you subscribe to the new channel so you get notified. And also, we are coming up to Independence Day
Yes,
very
sir.
soon for the country, 250 years. In anticipation of that, um, I've always been like, we should do more for Independence Day because it's not just independence, it's like, okay, independence is great for the country, right? But for us, like individuals, what would be even better is like financial independence. And so I want to celebrate Financial Independence Day. So we have a bunch of really good deals coming out. It's like, Amazon has Prime Day where we're having Financial Independence Day.
Um,
And we're having a lot of good promos and promotions that are coming up. That'll be announced to the email list and uh, some really cool, really, really cool stuff coming up in addition to what we have already. So
love that.
I'm excited about that. If you have not joined the quiz and you are watching and you're like, hey, this stuff is really good. I learned a lot on this show. Well, this is like, you know, a tidbit of what we share. Right. So there's a lot more in the club. Like we're putting this out for free, right? This is on the free show. What do you think is going to be in the good stuff, like on the paid program, right? So if you're looking for stuff like this, um, we do a lot more of it in the club. And so join the club. The link is in the description. We also have the option quiz. We've had literally thousands of people go through this already. And so much good feedback that I think if you're a trader, even if you're starting out or if you're advanced, you should take the quiz because it's going to give you advice and help no matter what stage of the journey you're on. That the link is also in the description. It's at optiongenius.com/quiz. No, sorry, wrong. Uh, optionquiz.com is the actual
Optionquiz.com, man. Yeah.
optionquiz.com is the actual thing to go to for there. And then take the quiz. It's free. It takes like 3 minutes. It's only
I really
15
encourage
questions.
people to just go do that because, like you said, whatever level you're on doesn't matter. There's something for everybody there.
Mm-hmm. Yep, something for everybody. Um, Looking at the markets, we're basically at the same where we were about an hour ago. Not much has changed. Um, so we'll see what happens going forward. And that's it for today.
Sure, a good one. That's definitely a good one.
All righty. Hey, how did Market Power do this week?
We've had a full array of wins, just wins across the board. So we had a Phoenix Lotto winner.
How much was that?
That was 1575, somewhere in there.
15, whoa, almost
Yep,
$1,600. Okay.
yep.
And
That
that's
was
on one
nice.
contract.
Yeah, yeah, beautiful. Then we had a double dip winner.
That was the winner
There's even a
yesterday.
possibility you could have done two double dips.
We did have people that did
I
two
think
double
there's
dips
one person
yesterday.
or a few people that did actually do it. They did two double dips.
Yeah.
So a double dip.
So two trades
Um,
intraday, and then we had a market power signal yesterday out at for the
they out for the bell
yeah
today.
for the close. So that one won as well.
Yes.
Yeah.
Active and just winning across the board. So
Mm-hmm.
we're
Yep.
doing great. It's been a great year with market power.
Market power has been phenomenal. This year, 20. So I guess this is what trade number 29 in a row that's won or
Yeah, it's
30.
30, close to 30.
Yeah. And we are very close to releasing news about the automation of market power. So we're basically if you want the market power trades done for you in your account, we're working with a company that is licensing the strategies from us. They have the software that connects to your brokerage account, and you just have to program the strategies into their software, which we've already done, and then it just works. So once you connect it, you turn it on, you can watch the trades happen in your account,
Which is a wild experience.
which is pretty cool. It
Yeah.
is really cool. And you don't have to worry about the emotions. You don't have to worry about the timing. I think this is going to be great for people who work because, we did our survey and a lot of people don't do the Phoenix. They can't get there in time for double dip, even though they see how much it's winning. And so this will definitely make that available to people.
Yeah. Or even if you're across the another part of the world. I mean, that's the same thing, right?
Well,
So
no, yeah. So right now we do not have a broker that
yeah,
does
okay.
international accounts. We are looking. Interactive Brokers, we reached out to. We were going to sign up with them, but they want $40,000. This is like what?
Yeah.
I'm like, this is going to help your customers, people. You're going to make, we're going to get more customers, more people trading, more commissions. But they're like, no, we want $40,000 up front in order to set up an API
All right, we'll
commercial.
check back with
Like, okay, well, let me look for somebody else. So there's Tasty Trade, but they don't have Canada, they don't have Australia, they don't have India. So I know we have a lot of people in Canada that trade with us. Australia is a big market as well, so we're trying to look at that, or um, we're gonna look at Moo. I know I've mentioned Moo Moo a couple
you. I
times.
know. Moo
Like, what
moo.
the hell? But they say that they are international. They open accounts a lot of places, and they do have SPX index options. So we're reaching out to them and finding out if they have all the proper connections that we need. And maybe that'll be a way to get the international community. Um, but for now, we're moving forward with Schwab as the main brokerage. And if people need others, then we can add those as well. But so right now we're looking for Schwab and then an international. And then later on, as we get more people in, then we'll try to get at more brokerage houses. So we'll see
Yep.
how that goes.
Exciting times.
Yep. But yeah, so don't buy any more on the NASDAQ 100. Now, S&P 500 might be a different story. So we're going to do some more research on the S&P 500 and see, you know, does the is it the same thing or is it totally different? What do you think? What's your hypothesis?
I think there might be something there, right? You find these things out, and typically, um, there's a good percentage that there might be something there. So,
No, no, like what I'm saying is like, so we realized that NASDAQ 100 inclusion doesn't really help the stock,
yeah.
right?
Mhm.
Is it the same at the S&P 500? What do you think?
I think it's gonna be somewhat similar. I think. Yep.
I don't know. I think I would if I had to bet on it, I'd probably agree with you, but I don't know.
Yeah. I mean,
Until we,
I'm leaning towards the possibility. Yes.
yeah.
Yeah.
Um, One thing for sure, though, I would, well, not for sure, but in my opinion, I would say that companies that are as added to the S&P 500 are probably not, they have not gone up 30-40% in 6 months prior.
No.
I
Yeah.
don't think
You're
that
dealing with
will
a
be
different
there.
animal, right?
Yeah, we're dealing with much larger companies. But I don't know. We'll see. We'll see what happens because any of the ones that are on the NASDAQ 100, most of them could probably be added to the S&P 500, right? Because they're the biggest in the NASDAQ. So S&P is 500. I don't know. We'll have to check it out because it's a lot more names, right? 500 names that you're competing against instead of, so we'll see.
Yeah,
We'll see.
they're just looking at different metrics, and it's just a different cohort. I mean, completely different.
Yeah. So cool beans. So that's it for today's show. Thank you everybody for watching. Please again subscribe to the channel. Check out the club. Check out the option quiz if you have not done so already, optionquiz.com. And then let us know in the comments or email us. Let us know what you thought about this episode. Are you going to are you going to use it somehow? Are you going to think that these guys are full of it and their research is stupid and that we were totally
Just open
off?
your eyes, right? And
Or did it
what
open
do you
your
think about
eyes?
it, right? Yeah.
And
Well,
yeah, it's like, what did you think? So let us know in the comments. Let us know via email. And we will see you guys all on the next show, which is Friday. All right.